top three things in my notebook this morning. Number one, the price of oil on the bounce. Number two, Russian stocks and the Russian ruble. And then finally, we'll hit on the 10-year bond yield and its read-through on global growth. So first, if you look at oil, you look at the complexion of the bounce. Why did we bounce? We got the Chinese rate cut. So again, we're running out of central plans at this point, but central plans do have impact, and a lot of people bought the inflation trade on Friday on that. So again, you have to study the complexion of the bounce of something like oil, which is definitively crashing. Again, the top end of the risk range is currently right around 77.5, and there's no support to just inside of 73.50. So again, in other words, oil could go back to 73.50. And again, that's why point number two today would look like it looks. Again, the Russian ruble's down another percent. That has crashed year to date. The Russian stock market, as you know, has crashed for the year to date, down 23.3%. And it's also leading losers globally. So again, the question remains as to whether or not deflation is being priced into both equity and bond markets. So again, for the third point, you'd have to look at the 10-year bond yield on that. Now, the 10-year bond yield says definitively between Japan, Europe, the USA, Russia, and back again, that global growth is slowing. When global growth slows, bond yields fall. You can see this. You can see this even in European bond yields. Spain has had a huge drawdown in the 10-year bond yield there. But on the 10-year U.S. Treasury yield, no support really to 2.22%. And again, with a newsy headline that GDP beat sequentially, you want to be buying more bonds on that. Again, the fourth quarter GDP comparison is the toughest of the year. The way that we model GDP is year over year. We don't look at the sequential seasonal. Again, that's the point. We're sticking with it. Growth surprising on the downside. It's right about half of what consensus thought it was going to be 10 to 11 months ago. So again, 10-year bond yield lower, buy TLT, and smile. Those are your top three things.